morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. It is, of course, Wednesday, and markets up, down, up, down. Yesterday, it was one moment to the next. Stimulus, no stimulus, stimulus, no stimulus. Markets finished up basically at their lows of where they opened yesterday, as really the deal came down late afternoon that, well, no stimulus yet. But hey, talks are still going on, so markets may try to rally again a bit today if we get some positive news on stimulus. Right now, though, focus is coming back to earnings this morning. We've got a lot of earnings coming out. Verizon beating estimates. Netflix missing subscribers. Also, that'll be down about 5% today. And, of course, AutoNation also beating estimates. They're up this morning. So, again, we're still watching earnings as we go into really kind of the big midst of earnings are here over the next 2 weeks. And that's going to give some support to markets, at least in the short term. Yesterday, though, markets did close, in the green, but just above their 50 and 20-day moving average. Again, that hasn't changed. That support level still holding for the S&P. Remaining on a money flow sell signal here that's providing that weakness that we've been talking about here over the last week or so. We said, hey, this money flow sell signal is going to provide downward pressure on prices, at least in the short term. Unfortunately, we're also about to trigger a MACD sell signal here. That's going to provide further downward pressure to stock prices here over the next couple of weeks, in particular as we head into the election. So a break of this support of the 50 and 200-day moving average is going to bring the September lows and the 200-day moving average back into focus. Now, that's about a 7 to 10% decline from where we are right now. And that would coincide with a contested election, like we saw back in 2000 with the Bush-Gore election that went to the Supreme Court. The market actually declined during that contested election by about 7.5% by the end of November. Something like that, an event like that, it could certainly put some more downside pressure, and we've got the money flow and MACD signals suggesting that more downside risk is prevalent here. So over the last day or so, and really down to the rest of this week, we're raising some cash, increasing our hedges, reducing our risk to markets here as well as we continue to look forward. The other area to be paying attention to right now is the 10-year Treasury, which did break below the 200-day moving average yesterday. Now, importantly here, interest rates have been under pressure, in particular because of this idea of more stimulus, right? The Federal Reserve is now the only buyer of bonds for the most part, and another $2 trillion worth of stimulus is going to require the Fed to absorb that issuance in order to do more QE, fund these programs like PPP, direct checks to households, Main Street lending programs, whatever it is. That's going to require an assumption of all that debt by the Federal Reserve, and what traders are betting on right now is that's going to cause interest rates to rise here because they won't be able to absorb it quick enough at a low enough price level. I'm not sure that's the case, but we do have a money flow buy signal still on bonds, which does suggest that even though we're not getting a lift in prices, that there is some upward pressure in money flows going into bonds currently, even though rates are dropping here. So again, pay attention here. We do have good support sitting back around these recent lows that were at the 200-day moving average previously, but this break of the 200-day is certainly concerning and does suggest that 10-year Treasury prices could go lower here in the short term. So again, just paying attention to that because that is one of the areas that's been hedging portfolios as well, and that's not been working here over the last week. So again, kind of weighing on performance here a bit, but paying attention to that very, very closely. So I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. We'll see you next time.